Good afternoon and welcome to GrainTV. It's April 1st, 2013. To my left is Logan Burgess and I'm Brock Shimbino. The grain sold off sharply again. Let's turn with a fire tip to see what happened in Chicago. Corn was down another 50 cents here today. Soybeans off just 12.25 cents. Wheat off 23 cents in Chicago, and Kansas City was off 17.25. Like I said, Logan, the grains really started to sell off sharply as soon as the overnight session opened. And I think really what was driving it, once again, was the fundamentals flowing over from Thursday's report.
Yeah, absolutely. Thursday's action really got things started, in particular on old crop corn, that quarterly grain stocks number. We'll take a look at that here in a moment. But basically here we're looking at a 5-minute candlestick chart of the May contract. As you can see here, this bar right here was just the few minutes after the report was released on Thursday. We hit limit trading, so we traded sideways, or I guess we're stuck at the limit here, moving sideways. And then right here's the open of trading on Sunday night. You can see we gapped quite a bit lower here, kind of drifted lower throughout the night, found a little bit of support around 650, and then when we saw some volume return to this market here during the day session, really seemed like that spurred this market lower. You can see here really the only one bullish thing to write about at all today was that we did have a nice little candle here to close the day, but bottom line, I mean, we're down 50 cents. It's not surprising that some people would be closing out some shorts toward the end of the trade day today. But bottom line, we're going to have to keep an eye on this market, see how it opens in the night session. Could be a turnaround Tuesday here tomorrow, certainly come a long ways down. And the report on Thursday really showed that corn prices need to move lower. If we jump into the slide here real quick, basically detailing those quarterly grain stocks as of March 1st, you can see here the reported value, 5.39 billion corn bushels in stocks there. That's about 400 million bushels higher than what the average trade guess was. So as a result here, prices need to move lower, spur some of that demand like I was saying. Two big question marks that we've had here recently really have been ethanol use and feed use, and it seems like that was reflected in the grain stocks released last Thursday.
It did seem mid-session we did catch a little bit of support around 650, but I think the funds really came in and started pushing this thing. Technical traders came in and started selling it off pretty quickly. We had funds sell about another 35,000 corn contracts today, 9,000 in wheat and 6,000 in soybeans. So, over the last couple of days, we've actually sold off about 75,000 contracts in the corn market, which is a substantial number, and, that's led to a lot of this downside pressure.
Yeah, absolutely. The one good thing that we saw today, just in the grains in general, it seemed like soybeans and wheat both hung in there. They were respectively strong compared to corn. And if we look out to the new crop deliveries, particularly for soybeans, we saw some strength there. So certainly that might be kind of a bright spot, but obviously catching a lot of attention is going to be corn closing down 50 cents today. We were trading under expanded limits. Trading limits were 60 cents today, and we almost saw that get hit today. I believe we were down 58 here at one point. So certainly very bearish action in the grain market today. Lower prices, though, hoping to spur more demand. Obviously, that won't be reflected in the export inspections we saw today, Brock. These will kind of capture movements from last week. But what did we see there in general for corn, soybeans, and wheat?
It was generally pretty good across the board. Okay. Corn, we exported about 19 million bushels, soybeans about 16 million bushels, and wheat about 25 million bushels. So corn and wheat actually came in on the high end of expectations for the inspections report. Soybeans were right in the middle of the expectations. But for the marketing year, if we take a look at these charts we've been following all year long, the green line is what we need to see for weekly exports to meet the current USDA projections, and the red bars are what we are actually experiencing. So you can see here on this corn chart that we did what we need to see to meet the current USDA expectations this week. But for the year, we're still running about 20 million bushels behind pace. A little different story for soybeans. We continue to run well ahead of pace to meet the current USDA projections. But as you can see over the last few weeks, we've come up very short on what we need to be doing seasonally to meet that current USDA projection. But we are still 152 million bushels ahead of pace to meet that projection.
Right. Right now this grain market has serious questions about demand just based on those quarterly grain stocks, especially for corn. But certainly with a big price decline like this, we'd really expect to see export sales return to the market. We expect feed use of corn to pick up a little bit here, and we'll be keeping you posted on that here on GrainTV. We'll get a couple good metrics of grain usage here coming down the pipe this week. On Wednesday, we'll be getting EIA ethanol production numbers, and then on Thursday, we'll be getting the export sales report. So we'll keep you posted on both those fronts here on GrainTV. But in general, Brock, I think that kind of wraps up the action that we saw here for a Monday. If you guys have any questions or want to take a free trial of the trading platform that you see here on GrainTV, visit us over at grainhedge.com or give us a call, 877-472-4607. Thanks a lot for joining us. Have a great night. We'll see you tomorrow.